All right, today we're going to look at market charts in a completely new way. We are going to pull back the curtain and decode the hidden story that the price is always telling us, moving past what looks like random noise to see the deliberate structure that's actually driving every single major move.
And this quote right here, man, it just sets the stage perfectly. For a minute, let's forget all the complex indicators. Forget about just hunting for that perfect entry signal. We're going way deeper. We're going to understand the behavior of the market itself. This is about reading the room, not just reading the ticker.
I mean, come on. We've all been there, right? You're staring at the screen and all the wiggles and spikes, and it just feels like total chaos. You're trying so hard to spot a pattern, any pattern, but it feels completely impossible to guess what's coming next. Well, what if I told you it's not random at all? So this is the absolute key. Where most people see noise and chaos, there's actually a deliberate, structured process playing out. It's really a story, with a clear beginning, a middle, and an end. And our goal today is to learn how to read that story.
The very first chapter of this story starts in a place that the source material calls the waiting area. This is the phase of compression, and it's where the market spends, believe it or not, almost all of its time.
And check this out, because this is a really startling fact. Markets spend up to 99% of their time in this state of balance, of just waiting. And those big, exciting trends that we're all looking for, they happen in that tiny little sliver of time that's left. So to really understand the market, you have to understand the waiting.
So what exactly is compression? Well, it's this period where the price gets squeezed into a tighter and tighter and tighter range. You'll see the volume just dry up. It looks boring, right? Inactive. But under the surface, something incredibly important is going on. The really big institutional players are quietly building their positions without making a big splash. And this just perfectly illustrates what it feels like to be in that waiting area. Price is just chopping back and forth, going nowhere, volume is dead, and your frustration, your impatience, it just builds and builds. You know those classic chart patterns you see, the pennants, the channels? They're not just random shapes. They're the visible result of this whole process, and they have a psychological purpose to wear you out and make you give up right before the real move is about to happen.
Okay, so you've waited. You've been patient through all that sideways chop, and then finally the price starts to move. So you jump in. But hold on. The market story has a plot twist, and trust me, it's a big one. This is so critical to understand. That first surge of energy, that first convincing-looking breakout from that tight range, it is very often a trap. It's a head fake, and it's designed to fool almost everyone. But why? Why does this trap even exist? Well, it has a very specific job to do. It's there to trigger all the breakout traders who have their orders sitting just outside the range. It creates this rush of emotional trading, FOMO, the fear of missing out. And most importantly, it lets the big players capture liquidity. Just think of liquidity as the fuel for the market. It's the giant pool of buy and sell orders from the crowd. They need to tap into that fuel to fill their own massive positions before they can launch the real move in the other direction.
So, after the trap has been set and sprung, we finally get to the climax of the story. This is the part everyone's been waiting for. This is the expansion.
So let's just quickly recap this whole sequence. First, you have compression, where energy is getting coiled up like a spring. Second, you have the deception, that false breakout that traps all the eager traders. And only after that, you get the third and final stage, expansion. This is the true, powerful move.
And expansion is the polar opposite of compression. The trap has done its job, that liquidity has been captured, and now, boom, volume floods back into the market. All of a sudden, there's a clear direction. There's real momentum. This is what a real, powerful trend actually looks like.
So, here's the bottom line. The best opportunity isn't in trying to guess the breakout from compression. It is not in chasing that first deceptive move, no way. The real high-probability opportunity comes after the trap, when you're on the side of the true expansion. It takes patience, for sure, but it puts you on the right side of what the market is actually trying to do. Okay, so knowing this three-step sequence is fantastic, but how do we actually use it? It really requires a fundamental shift in how we think and in what we're looking for when we open up our charts. So it really boils down to this choice. The old mindset gets you stuck. You're depending on lagging indicators, you're guessing at patterns, you're reacting emotionally to every little price swing. The new mindset is all about reading behavior. It's about observing the structure of compression, patiently waiting for the deception, and ultimately understanding the market's real intent.
And this is just the perfect summary of everything we've covered. This is the simple, powerful narrative that's been hiding in the charts all along. Price compresses to build energy and let the big guys build their positions. It deceives to trap the crowd and gather fuel. And only then does it deliver the real trending move.
So I'll leave you with this one question. Now that you can see this sequence, compression, deception, expansion, how is that going to change the way you look at a price chart? Instead of just seeing noise, maybe, just maybe, you'll start to see the story unfolding.